You've heard of Warren Buffett, Ray Dalio, and Ken Griffin, but my next guest is no less impressive when it comes to dancing with the bulls. Join me as we cover how to get started trading the market, where to get the information, and different trading patterns needed to recognize the next breakout. So the question is, what will you be doing to master the market moves so that you too can enjoy your pursuit of making billions? Here we go. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Tony Greer. Tony is a former career trader from Sumitomo Bank, Union Bank of Switzerland, Goldman Sachs, and more. Currently, he's the founder of TG Macro and an editor of a phenomenal market publication called the Morning Navigator. So what this means is that Tony understands trading, markets, and economic moves that help you and I in our pursuit of making billions. So Tony, welcome to the show, brother.
Brian, thanks for having me, man. I was immediately attracted to the name of the show because making billions is something that I definitely strive to do, or at least think about when I wake up every day.
I'm a brother on the path with you, my man. So, you know, this show, we've been very fortunate to have amazing guests like you. And by the way, when you and I started talking, man, I was excited and I can't wait to get into that. I would love just to, right out of the gates, you and I have been beginners before. Everybody takes that first step. We can address the beginners on just some high level stuff here from all of your experience in trading and markets and economics and commodities. I mean, I could keep going, folks, but you get the idea. Tony's a big deal. And so one of the things that we want to highlight is I would love for you to address the beginners. We're in 100 countries around the world. We're in the top 2% in the world of the show, and they are dying to know, look, I'm starting out. I love trading markets. What's some advice you can give to the beginners on A, how to win, and B, how not to lose in the early days?
Yeah, you know, as ironic as it sounds, Ryan, thinking about the way to approach trading in the early days is very simply, how do I survive and live to trade another day? That's got to be the number one rule when you wake up in the morning, whether you're a first day novice or a 30-year veteran. And quite honestly, it's the most important thing about trading is that, if the way that it takes a long time to get better at this skill. And so you have to give yourself a really long runway to be able to make mistakes. And so if you want to be able to make mistakes, you have to stay disciplined. So that's one of the things where when you figure out how to take the emotion out of trading, it helps you stay disciplined and take small losses and sort of live to trade another day. But that's one of the biggest things that I would tell beginners to start to think about.
Awesome. So live to trade another day, which you're spot on, man. You bet the whole farm, get wiped out, you're done, right? Brush off your resume. We're working at McDonald's or whatever that might be. So it sounds like covering some risks. What do you put in place as far as your trades? What advice can you give to those beginners as far as tactical things they can do to live to trade another day?
Yeah, I have tons of guardrails on all the risk that I put on my books. And a lot of it has to do with, first of all, I'm a big, like my basic block and tackling tactical move is to trade with a trailing stop loss. So to start off by having, finding good risk reward to get into trades, making sure that I have a stop loss set behind the markets. And then if the trade does happen to go my way, if I'm lucky enough, I move my stop first up to break even so that I don't have a trade go from being profitable to going into the red, which is one of the worst things that you can do to yourself. And then if it continues to go my way, I let that stop trail right up below a moving average that I pick. And then when it gets triggered, I just get out without, that's kind of one of the things that takes the emotion out for me. And then there are other things where maybe a position, say it's going wrong, right? I mean, that happens as much as it is when that happens as often as it does go right, if not more often. So you have to understand how to manage that, right? And having a plan going in is always the best thing. A level where you know that you want to get out of that position and be flat or at least cut it in half or something like that. But I also have a rule that I don't necessarily wait until my stop loss gets ticked on every single trade. You have a kind of, when you get into a trade, you have a vision of what you think is going to happen and how you think price action is going to proceed from a certain point. And if that doesn't happen and things start going wrong and the world starts changing on you, that's a good reason enough for me to get out of a position. If things don't look like they're panning out the way I had in mind, then that's, sort of, to me, that's an alarm bell that's going off telling me basically that I have to adjust something or at least think about it.
Man, that's brilliant. You remind me. So sometimes we say getting stopped out when you had a stop and it gets you out of your position. And I remember a time that, and I'm sure he said it multiple places, but Warren Buffett, he said something along the lines when I was a young man, I was fortunate enough to hang out with him for a lunch. And he taught me and my colleagues, he said, all the money I've ever made was from selling too soon. And he has all these quips, and it's really funny. He's like a really witty grandpa, and you know, he's obviously well respected in the investment community by many people. But the principle is the same. Is what Tony's talking about. He was like, sometimes I don't wait for my stop. If this thing's not moving the way I need to, I get out, right? So you can see the discipline that he does. And just like that saying, and regardless of where it came from, just like that saying is like, look, all the money I've ever made is from selling too soon. You're not going to make money when you sell too late. That's for sure. So you can see the discipline in Tony and all of his experience that he's generated, and he's bringing it to us right from New York. So, you know, with trading and everything, I'm just curious, while we move on to the next section, let's talk about the market, right? This is something that you follow very, very clearly. You follow the market to a T. All traders do. And so I can't wait to talk about this with you, brother. So as far as the market goes, I'd love to hear just what are you seeing out there, number one, and then number two, where do you see it going after that?
Oh man, there's a lot of cross currents going on in the markets right now. You have to start first by looking at, you know, the global macro story where, you know, there's global conflict. Looks like that situation is heating up, right? So that's one thing that you have to keep at the forefront of your mind for the first thing you wake up every morning, to kind of check and see if there's headlines scrolling around that are going to be a really, really serious de-risking situation, right? So as having situational awareness is a good place to start for me. So we've got the S&P 10% off of its highs in this sort of very volatile world where we've got an inflation problem in the United States. We've got the Federal Reserve as of today making no more interest rate hikes to address that inflation problem. They've made that clear. We've got the curve responding, actually leading well ahead of that sort of pivotal change in markets where we go from a series of tightening where we raised rates from 25 basis points to over 5%. And now it looks like, you know, we're going to stop raising rates and possibly have to cut them next. So we've got to deal with that. We've got to deal with the curve steepening back towards the zero boundary. We've got a situation overseas where the yen is coming apart like literally wet socks on a chicken, which is one of my favorite trading terms. But the yen is sort of, you know, tumbling to new lows every day. The Bank of Japan just had to adjust their yield curve control plan so that the sort of rate that they were keeping 10-year yields is now very sort of loose and not a stable hardline rate. So all of those global macro currents are, you know, something that has to be considered. But when I look at what the S&P has done, you know, the S&P has adjusted quite a bit to a lot of that risk that I highlighted. It's backed off its highs significantly. Part of the driver to those highs was the NVIDIA's, you know, artificial intelligence earnings that, you know, becoming the sort of marquee sector for technology and kind of running with the baton. And it looks like the NVIDIA move might be over for the short term. It looks like it's reached a peak, started to curl over. And so we've got a great pullback in the S&P and the NASDAQ to their 200-day moving average, you know, simultaneously. For a technician and a natural born bull, that's an appealing type of trade right now to play from the long side when, you know, sentiment is negative as it could be. The CNN fear and greed index is pinned to extreme fear right now. We just saw the VIX trade up over 23, 24 in the last pop. So people are buying options to try to adjust for a potential slide in the S&P from here. And there's a lot of people that think that there's a complete crash coming. And generally, when you're seeing that, I remember getting sucked into all of that downside hysteria and possibly getting caught up in it as a trader. And I kind of don't get as worried about the stock market as I used to, and say, you know what's going to happen, just like the Fed did today. They're likely to say or do something that is going to, number one, stem the slide of the stock market, because that's something that they're wildly conscious of. And, you know, say something that might be bullish about rates being easier for the next period of time. And it's kind of something that Powell maybe alluded to today, if he didn't come out right out and say it, right? So stock market bounces off the 200-day moving average today. And I think that it's got, you know, what's amazing is that the sell-off is happening against a tidal wave of upside seasonality. You know, the fourth quarter is usually the best quarter of the year for stocks. Everybody's familiar with the Santa Claus rally. I mean, you know, that's something that you kind of learn by the time you're in your 20s. You hear about the Santa Claus rally, and then you figure out what it means. And it means that stocks generally, you know, kind of everybody does their business, and you never kind of short a dull market, and things float away into the end of the year, you know, with a little bit of optimism. So the market sell-off has been contra that, and everybody's kind of looking. Well, I mean, I know I'm certainly looking for that seasonality to start kicking in, especially when everybody's got so bearish and everybody's so terminal about the S&P. So without going too deeply and letting you guide the conversation, that's what I see in the stock market. I think that it can adjust here. Going forward, the big deal is whether a lot of it depends on the economy. If we have a rough road in the economy, it might be more difficult for earnings to hold in. But what you'll see is the Federal Reserve compensate by keeping money easier. and that's not necessarily a bad combination for stocks. If we have this inflation problem that doesn't go away and the Fed is handcuffed where the economy is sort of in bad shape, that might be a problem in the stock market. But I kind of don't, I kind of trade off of the charts, and I trade off of my general broad views and kind of make sure that my clients are in the right sector. That's really important to me when there's something going on like in uranium this year and home builders and tech. I try to make sure that we're steered in the right direction there so we can capitalize on what's moving every year and what the sort of all-star sectors are every year. And that's kind of how I set up my book, and that's what I'm looking for.
I love it. And where do you see commodities going? Is this something that you like right now? I mean, folks, it's not financial advice. I'm just asking Tony what his opinion is, but how are commodities shaping up in your book? What do you see there as far as the future goes?
It's people have just begun again to kind of grab for hard assets a little bit. I like the oil market. I can stay constructive. We've got a set of, kind of historically low inventories. The exploration and production companies, the refiners, the oil services companies are all set up pretty well to rake in profits over the next several years, sort of even as the administration tries to put a clamp on fossil fuels, because everybody knows that the whole, whether it's battery power or anything, they're going to start off by having to build all of that out using fossil fuels. So we're not really weaning ourselves off of it. So you can stay constructive and trade a lot of things in energy from the long side. Also, it shrunk to be a super small percentage of the S&P right now versus what it used to be, right? Via much smaller market caps. Exxon got kicked out of the Dow Jones, and next thing you know, the energy stocks are only 3.5% of the S&P. So there's room for that to grow if the sector is allowed to grow. And once the sector is allowed to sort of reinvest in itself and look forward to a brighter future, and not a future of the administration canceling leases and sort of not allowing them to drill in certain areas and canceling pipelines, then they'll have a better day. Then they'll have their moment in the sun. So there's sectors like that are important. The gold market, physical gold the commodity itself looks like it's something that you might want to cling to right now. While there's all this unrest in the Middle East, I mean, gold was falling out of bed until the October 7th attacks in Israel, and all of a sudden turned around and rallied $150. So it's really respecting the fact that there is a clear and present escalation going on, in sort of, world politics and stratego, et cetera, et cetera. So that might be something that, has got massively upside potential to it, right? Where you can make an upside, kind of set your odds up really well for an upside move like that. So that stuff's interesting to me. I don't get bullish base metals anymore because, I tried trading them from the long side when we were sort of moving into the Biden administration and all of the alternative energy stocks and solar stocks were soaring. And it seemed like if we were going to make this big pivot toward battery power, that we were going to need tons and tons of aluminum and copper and zinc on top of, all of the rare earth metals that it takes to make batteries. And the reality is that draw from those companies just isn't that strong, and it doesn't create a bullish scenario in base metals, and they're not rallying, and neither are the base metal miners. So that sector to me is something that I've given up on until there's something to play or be excited about. And the grains are something that I don't touch by policy because who the hell knows, what kind of weather is going to bring or something like that. But there are some offshoots of the energy trade that I think are good investments, like in the fertilizer space, et cetera, et cetera. Natural gas is something that can flare up from now and again. So, there's a lot to do in the commodity space, that's for sure. The coal trade is still alive and well. More importantly, the uranium trade, that's a sector that's competing with some of the subsectors of technology this year. And it seems like we're just rolling into the sweet spot of the trade where, there's a real shortage of uranium and nobody knows what the next move is going to be, and prices are at the highs, and it's like, okay, who's going to give? Something's got to give next. And so it looks like the upside is very vulnerable there. So that's my outlook on commodities. I think that kind of covers everything. If I missed something, let me know.
I think you covered all sectors there. So the natural gas flare up, I see what you did there. That was really good. So oil, gold, these are bright places. These are things that you're definitely in love with as well. Brilliant. And uranium, I absolutely agree. I think there's a lot of new technologies that are coming on for nuclear power or more benevolent uses for that. There's a lot of, I think demand is going to start ticking up a little bit with some new technologies that are coming online for energy production through nuclear. So yeah, I absolutely agree. I'm no trader, but even I can sniff that one out a little bit. So, just transitioning, and like I said, so we're punching it up. We're getting more and more advanced as we move along. So, a big reason why a lot of people listen to a show like Making Billions with that kind of ambition, these are people looking for that edge, and we take pride in delivering that. And my friends, Tony is your guy to listen to. So there's a lot of things that all of our guests bring on. But that being said, I'd love to hear from you as far as, look, man, all things considered, you're a very experienced trader. You've been doing this a very long time, multiple sectors. You've got an amazing publication. You've got a lot of stuff going on. You just want to help out. We're kindred spirits, brother. Yeah. But that being said, speaking of helping out, what are some, say, 3 or so things that you can leave behind as far as like solid advice to succeed in your industry?
Yeah, that's a good question. You know, if you want to get granular with it, I think some of the most important things are first, you know, the first thing that you have to learn, especially when you're a floor trader by nature like me, is sort of where's your price discovery and where's your liquidity? You know, and the first thing that you figure out when you sort of leave an upstairs desk and walk down onto the floor, you're like, how do I figure out what the price of everything is, right? I don't have a computer screen in front of me, right? And somewhere around there'll be an old salty veteran that goes, look at the board, kid. Everything's up on the board, right? So that's kind of figuring out for now as a retail beginner experience, whatever trader it is, you kind of have to figure out which car you want to drive and where you want to go to get your information, you know, getting as much of it in one place is best, you know, so, or versus say maybe having a really hot rod great trading system is really important. Whatever it is, figuring that out is something that's super important, right? Like, so that's just kind of like figuring out what kind of platform you want to get started on. And it's really important to be sort of looking at relationships find a place where you can look at prices next to each other and see how they interact and understand, you know, make yourself understand what's going on when rates are moving, what's going on when the stocks are moving, when commodities are moving, what's driving it, and things like that. And so it's really just starting to get that pulse of the market, right? And that discovery of where things are, when things are moving, what's going on. And that's one of the most important things for me. You know, if you don't have, you know, if you don't have a place where you're like, let me see what's going on, pick up your phone or sit at your computer and bang, you know, have the world all unfold to you, then you're going to have a problem versus the guys that do, right? So it's still a competitive advantage kind of thing. And so that's really important to me. I would say the second thing is kind of, you have to figure out how to make things really systematic so that you can control your emotions, right? It's from the beginning. You know, I remember when I began trading and put, you know, the first several trades on the board and literally felt my palms sweat a couple of different times, you know, when money comes and goes so as fast as it does, you know, and sometimes you'll step into something that's like touching a hot stove, you know, and you'll say, oh, you know what, this thing got to trading this level. This is a support level that I want to buy it. Let me stick a bid in. Bang, your bid gets hit. Bang, it's 5% lower. It's still going down. And you're like, wait a minute, what just happened? Right? Like I just got freight trained, you know, and it's kind of getting those experiences and learning those experiences and what to do about it. Right? Nobody is going to sit there and be calm when they get run over by a freight train and a lot of money goes up in smoke. Right? And people are going to get excited and figure out what their next move is. So learning to control that, have a plan for that is one of the most important things by, you know, using some of those mechanisms that I talked about before in terms of tactical trading. I think that stuff is really important.
You know, I'd love to chime in on this because, you know, I had a very similar journey, Tony, when I first started in finance. Those of you know the story, grew up in relatively modest beginnings, we'll say. And all I knew is there was this magical fairyland called Wall Street that made you marry a pretty girl and drive a Porsche, right? I was just watching Hollywood. So I figured at 12 years old, whatever that was for me. And I remember when I first got into university, and this is what Tony's talking about, is he was like, first you just need to dial in, pay attention, consume information, understand how things work, how things are correlated or not correlated. When one thing moves, like interest rates, okay, what happens when interest rates go up or down? What happens when oil or copper goes up and down? And really just pay attention. That's all I did. I literally had CNBC on, whether you like it or not. That was all I had access to 100 years ago. And I would just follow it. And I remember the first light bulb moment as someone who was totally naive. And this is what Tony's talking about is like, look, man, if you're just starting out, consume information. Now, one of the best newsletters that I've ever seen on this is, I don't know if it's even a newsletter, but your publication, Tony, is a phenomenal publication. Maybe can you, because this goes right into your advice. I know it sounds like I'm promoting it, but it's because I believe in it. And so I just want to make sure, like, maybe you can just a couple minutes, like, what can people, you said, hey, pay attention, follow the market, consume that data. You publish this stuff for people. Maybe walk us through a little bit of the value that provides for a lot of your subscribers.
Yeah, that's a great question, Ryan. Thanks for letting me go into that. My whole sort of mantra for the Navigator is to sort of, number one, give people a place to look in the morning, right? And so if you're starting by reading the Navigator, that's going to be a really good one-stop shop for you to see what's going on in the world, how markets are reacting to it, what the risk is now, you know, what our eyes on the prize might be, things like that. And it's really kind of democratizing the really, really heavy fire institutional trading desk jobs that I had in what I call the first half of my career. Before I started doing this, I had experience trading currencies and spot and forward and trading commodities. And if you're trading commodities, you have to trade the interest rate markets because you have a lot of cash involved with what you're doing. I had experience in equity sales and the natural resources space. So I've had a lot of customer flow on my desk, and I kind of have an understanding of what the mechanics of, what drives markets are. And the whole idea it started, I launched the Navigator as a way to be a salesman to a client that was in California, where he could wake up in the morning and have his go-to publication be the email that I sent him, which was from his friend that explained things that were going on in the world and what the markets were likely to respond with. And so writing those thoughts down for one trader with a very big job became something that organically grew to a blast list of 1,500 people when I finally broke off and took the Navigator to a subscriber model publication. So what I like to do is try to, narrate the markets for people, and kind of point to some of the blind spots that they might not be able to see without a Bloomberg, or might not have had the experience to follow, and say, look, this is what's driving the market right now. This is where it's driving it to. This is what could potentially happen. And I'm not the kind of person anymore who has a view on the world and expects that I'm going to be right and markets are at some point going to agree with that view. That's not how I make money. The way I make money is I follow markets really, really closely using my own methods, and I let them tell me what they're doing. And I sort of let them show me where the next trade is and what the next breakout might be. And so that's what I try to provide in the Navigator. And it's kind of very much covers that sort of first stop shop for, somebody that's going to start their trading day to have a publication in front of them, and somebody that's going to come out and write and tell them what's going on. And also have a couple of informed opinions on what's going on and what might be a suitable place to take risk. So that's really the goal that I have every day is to really, it does start with making money. I do run a view matrix there where I count up the percentage points that I make on trades. I don't size things for people because I'm not a wealth manager. I kind of just want to point them in the direction and say, hey, I put us into this trade. It went 15% and we got out. That's plus 15 percentage points. So I guide people into the sectors that I think they should be in, and, put all kinds of good risk reward in front of people. It's really a very good idea generation trading publication. So that's the impetus of it. And that's what I do. That's what I get excited to do 3 days a week. It's really something that's fun for me.
Yeah, it's phenomenal. And you're one of the best, I don't know if you set out to be this way, but you're one of the best pattern recognition traders that I've ever met. And I'm just curious, like how maybe you don't have to describe them, but we can let our listeners, if they're that interested, they can reach out, subscribe or whatever. But what are some of those basic patterns that you can point people in just to learn? Like we've got flags and, what are some of those basic ones that you would recommend people do just to really get good at recognizing trading patterns?
Yeah, absolutely. I very much consider myself a hunter. And like you said, it's a hunter of those patterns that I recognize. And the patterns that I recognize, I'm a bull market trader. I trade things from the long side. I do better when they're going up than trying to make money being short. So that's generally the way I approach markets. I generally approach my prop trading and speculative trading by trying to find stocks that are trending from the bottom left to the top right of my screen and try to find places that I can jump in when it's cheap and sell it when it's dear, kind of in line with the stock's behavior, et cetera, et cetera. So talking about buying bull market securities, something that you'll see time and time again, if you study charts and stocks and commodities, is you'll see a commodity that rises, from the bottom left to the top right of your screen, and it gets above its, 50, 100 and 200 day moving average and goes on a nice run. And then at some point it breaks down and trades into those moving averages and consolidates for a while. And maybe it trades through them for a little while, but what it does is it never gives up the bull trend. It just takes a pause. And that's when I start really zeroing in on things. Right. And it's from whatever level it came from. It has to sort of show me that it's on the move and that it's now consolidating. And that's sort of where you'll find a pressure point where sentiment will now get negative and people will start getting short and they'll start looking for a big reversion to the mean trade. And what actually winds up happening is the real bull market that exists underneath takes over, and then you'll see the stocks start recovering. And like a big trade for me is finding that security and then buying that security when it clears first the 200 day, then the 100 day, then the 50 day or whatever order they're signed up, and then regains that bullish trend that it's been in all along. Right. So that's a pattern that's like, I see those like in my sleep, and from 100 miles away through a scope, I can see those, so that's one of the main things that I focus on. We've seen it time and time again in the energy markets and energy stocks. We've seen it, if you pull up a chart of Marathon Petroleum, it's a refiner chart that we've been trading from the bull side in the Navigator for 3 years now. Since the oil breakdown, it's one of the stocks we bought when oil went to $0. And that's a stock that rallies and consolidates and breaks down into moving averages and consolidates for a little while and gets on its horse and goes again. And you can look back in the history of the chart and say, okay, let's just see how many times it did that, going back to when the stock was really depressed. And you'll go through the chart and go, oh my God, there's 1, there's 2, there's 3, there's 4, there's 9, there's 10. And you're like, wow, like the trend is your friend, man. Like if you can't make money with that kind of observation, you're going to have to really try a little bit harder, because that's what you should be digging into, things like that. And so I'm good at finding those and exploiting those. And most importantly, kind of like when on a blackjack table that you have to split aces and eights every time. Most importantly, I get into these trends and know when is a really good time to upsize. Like the coast is clear here. The selling has been done. We're about to have another leg higher. And that's when I kind of try to wake everybody up in the newsletter with pots and pans in the morning and say, this is what I'm digging into today.
Yeah. Or also wake them up with a cup and handle, right? That's another trend or another pattern that you can look at. Cup and handle.
Pen and flags, head and shoulders patterns, things like that. Channels that stocks trade in. Yeah, that's all in my toolbox. Those are the things that I use to make money every single day.
All right, there you go. So flags, pen and flags, head and shoulders, cup and handle. You guys can look those up. We're not going to go over those on this show. Or, Tony actually talks a lot more about those in the Navigator in his publication. But so understanding those frameworks, those preconceived patterns, seeing those patterns, studying those patterns, consuming information, being disciplined into your system so you can control your emotion, but also being ready to get out before you get stopped out, right? Just like our brother Buffett would say, right? All the money you're going to make. All the money you're going to make is from selling too soon. So, I threatened you with 3 things. So we went over 2. I'm wondering if you have maybe a third piece of advice that you can leave behind and really just walk people how to accomplish those things.
Yeah. As a trader, it's important to do a lot of documenting, a lot of journaling, and a lot of analysis of what you're doing, because what you want to do is, first documenting things that are going on in the market so that you have a clear head and understand, okay, this is going this way right now. This is going this way. Maybe this is why, but these are the trends. Like this is happening. I can see that. Starts with making observations like that and forcing yourself to write them down, because that's the only way to really get it out of you sometimes. And so that's important. Sort of watching what you're doing so that you can develop a style, right? And watching what you're doing and say, okay, I put these 4 trades on here. What went right? What went wrong? And you'll find soon enough after time where you say, oh, the one where I sort of stuck to my discipline, traded off the chart, found good risk reward, and employed my trailing stop. That's the one that went right. Look at that. Look at the one that went wrong. What did I do wrong? Let's see here. Well, I wasn't patient on my entry point. I got in at a ridiculous price that put me on my heels right away. I waited too long to get out. It traded through my stop loss. I thought it was going to come back. It never came back. It went down another 10%, and I lost all that money too. That wasn't part of the plan. That's just gone now, and you start realizing like, oh, right. Like, the light bulb goes off. Like if you're irresponsible with your money, it disappears super, super quickly. Right. So that's where you have to start employing all of those elements of rigor that I was able to learn on an institutional trading desk when I had to report to Lloyd Blankfein and Gary Cohn about what was going on that day. And so I've kind of taken all of that discipline and rolled it into something that people can chew on and understand and say, you know what, that's actually not that difficult. Let's just kind of play the game the way we would play blackjack and, make sure that we stand on 17 and we split aces and we double down on 10s and 11s and we play the game right. Maybe we'll start to make some money at this. And sure enough, when you are extremely introspective and extremely humble and extremely, careful and protective of your money, then you'll start to find some success. And then when you do that, it's like getting better at hitting. It's like Manny Ramirez figured out he was a good hitter and he just kept going to the batting cage and getting better and better and better and better. And that's something that can happen to you as a trader once you sort of figure yourself out. And that's the way that I think that's the way you should kind of be guiding yourself every morning, is to kind of figure out who I am in the world of trading, how I like to take risk, what I'm comfortable with, how I know I can be disciplined and things like that. And you can find some success. It's an incredibly liberating feeling when you can understand markets and understand how to exploit them as well.
Awesome, man. So as we round third base and wrap things up, is there anything at all that you would like to leave for our listeners around the world, ways to contact you or other offers, anything at all?
Yeah. You know what? Ryan, because I love your podcast. I love your style. I really appreciate the way you approach an interview. Why don't we say that for your subscribers to get a 25% off a subscription of the Navigator, you can use the discount code M as in Mary, N as in Nancy 25 or Morning Navigator 25. You'll get a 25% discount off the first year of your Navigator subscription, which is $800 per year. So that's something for your subscribers. You can follow me at TG Macro on Twitter. My website is tgmacro.com. I've got samples of the Navigator on there. My next level of product line includes a TG Macro Slack channel that I always say is more fun than a frog in a glass of milk, because we've got 150 ninja traders in there and about 30 or 40 of us banter back and forth about risk, markets, the world, foodie stuff, general stuff, book recommendations, health, wellness, and diagnostics. We talk about everything in there. But that's what I'm doing, and that's how the business is being built. And it's really one interested investor and trader at a time, and I'm willing to help everybody. So, and especially the people that hear from me from your podcast. So thanks for having me here, man.
Yeah, brother, it's always a pleasure every time we talk. So, just to summarize everything that Tony left for us, follow and hunt the market. Consume all the information you can, again, with his publication or any of them that you're interested in. The second thing that he said is you got to manage your emotions. And the best way to do that is to have a system and be disciplined with that system. And then finally, document your trades, guys. Document your trades to accelerate your excellence. You do these things and you too will be well on your way in your pursuit of making billions.